Trading Market Technicals morning call video for Monday, April 15th, tax day. Hope everybody had a great weekend. Want to get right into it. There's a lot of information to go over. Friday we did have a slight down day, although we were down about 68 points in the Dow. Dow basically closed flat, down 8 cents. U.S. dollar down 11. S&P down 4.5, NASDAQ down 5. The big news was gold. Gold down $78, and as I'm recording this in the early morning, Monday morning, gold is down another $80. That should put a damper on a lot of the risk off mentality, because when you have commodity blocks like this really starting to sell off. In addition, last night we did have some really weaker batch of China data that came out, and I mentioned this going back months back, that China will play a role on a risk-off sentiment. Now, obviously, we're talking, this was several months back, and I still believe in that. China is definitely a manipulator of their currency and their economic data, so that's hard to fight, and you never want to fight a trend. However, we did have some really discouraging GDP numbers that came out last night. That's going to intensify the risk-off mentality as far as to a lot of the commodity block currencies. New Zealand dollar, Aussie dollar, the Canadian dollar, they're getting really hit overnight. Actually, even the E-minis are down right now 7 handles in the pre-market. So that should set the theme and open the door for additional selling pressure, at least for the next couple of days. Now, we do have options expiration, which generally is bullish. Just take a look at Friday. Last Friday, the market's gapped lower, and then we just kind of grinded higher all day. And when you have a manipulated market, that's usually what happens, especially when you have no volume. Markets just tend to grind higher, and there was absolutely no reason for the market on Friday to literally close on a flat note. Buyers of dips continue to come in. They think that the Fed is still going to stick behind their asset purchase program. So free money means equities higher. So that's been a theme for this month and the last couple of years. But when you have everybody long, and this is why I say use caution, and that's why I'm only day trading. I've taken a step back from swing trading because the markets have gotten ridiculously overbought, and I know it's not a sell signal, but I'm just not ready to put myself at risk in the overnight session where you can have a possible big down day just like gold, and I'll go over that in the charts with you. So my choice is not to put on any risk overnight and just day trade. And sometimes it is boring because when markets just grind higher, low volatility environment, there's lack of interest actually. So a lot of stuff to go over. We did have a good week. Take a look at the performance board. We were up about 2 to 3%. NDX up 3. Now the Russell, which had an outside day reversal on Friday, which I'm going to show you, also is kind of discouraging. Should be discouraging for the bulls as well. S&P about 2.25%. Dow up 2% for the week. And now transport's up 1.76%. So look, green all across the board. Really good week. Strong week. And it actually finished on a strong note on Friday. But as I mentioned, we had some poor economic data that come out in the U.S. Retail sales, initial jobless claims on Thursday were terrible. I'm so surprised how the markets closed flat and just pushing all of that aside. That to me is that you have this euphoria of buying stocks. That eventually is going to bite the bulls because what happens is you're just ignoring what's telling you that we may have a possible evidence of cracks in the U.S. recovery story here. And when you have soft economic data in China and weaker than expected data in the U.S., that's an alarming reminder that these economies may not be out of the woods yet. And that's just, again, that's just me talking, but, nothing to really to go off a trade-off, but definitely to use caution if you're swing trading and position trading. Again, day traders really have, you're flat at the end of the day, really doesn't matter. But just wanted to put that out there since we do have a lot of followers that are a little bit of everything, investors, long-term investors, swing trades, position traders. So definitely use caution. Now today could be a one-hit wonder that markets actually dip one day, and that's really been the theme, right? 1-2 day sell-off, shallow sell-off, and they buy them right back into the close and into the end of the week. And that could happen because it is options expiration. So I wouldn't get too bearish, but we need price to break down, and it actually would be a very healthy thing for the economy and for the least the markets in that tune, that you have a market that can't continue to grind higher and higher because the sell-off will be a greater impact. Where if you had a sidestep market, and you did get some sort of a correction, it would be a shallow correction, whereas you wouldn't have this scary sell-off like you had in May, the flash crash in May a couple of years back. All right, so let's go into our indicators. I'm just going to briefly just share with you what we're looking at. And I brought this out many times. I said, look, indexes are moving, stocks are not really moving. Stocks above the 50-day moving average and the S&P 500, they're lagging, as you can see. So really, the indexes are moving more than individual stocks. And as you can see here, lower high, lower high, lower high, and higher high, higher high, higher high. So markets are not moving really. The indexes are, and that also puts a damper on if you're day trading. All right, so let's take a look at our NYMO. And as you can see here, we did sell back down a little bit. We had down 16 in the NYMO on Friday, so we're still really in this neutral territory. But again, the NYMO is a little different, whereas we could continue to grind higher and sell and be in overbought territory in the 60-70 area, where more of the momentum indicators were reading much more overbought than obviously the NYMO. And we have plenty of room to run to the downside, by the way. So if this market does sell off, there's plenty of room to run before you get into that 70, 80, 90 oversold area. Okay, but something to keep an eye on going forward. Now, let's go into the precious metal. Well, before we do precious metals, let's go into the some of these other indicators here. New York Stock Exchange Summation Index. As you can see here, we have divergence, markets moving higher, and the indicators are not. So we have lower high, lower high. Same thing here on our weekly. This went back on a sell signal. We won a long signal 2 weeks ago, 3 weeks ago. Now we're back on a sell signal while the markets continue to go up. This is a very reliable indicator, guys. You do a 5-3 stochastic overlay on a New York Stock Exchange Summation Index weekly. This is a great indicator. This went on a sell signal 2 weeks ago. Okay, let's take a look at the NASI. And the NASI weekly went on a sell signal just back last week. Okay, last week's, the end of Friday, went on a sell signal. I'm sorry, 2 weeks ago, apologize. So that also went on a sell signal. So we have sell signals a lot in our indicators. And just a real quick on the VIX, because the market rallied into the close, and at the end of the day, we ended closing flat. VIX actually ended down on the day. Okay, now I would have liked to see a little bit of a flush in the VIX, but that could actually not happen today if the market does continue its sell-off here. All right, now let's go into the gold and copper. I want to show you, let's show you a daily chart of copper. This is Friday's copper, guys, and I mentioned to you, weak copper is definitely a leader. It's an industrial metal. They call it Dr. Copper. And when this happens here, you could get market continue to rally, but at one point in time, it's like the rubber band. When the rubber band starts to snap and pulls back, everything is going to pull back. And how this copper is really gets me nervous if you're a bull. Okay, now again, I'm day trading, so it's a little different. But if you're holding positions, I keep saying it, I mean, protection is cheap. Why not buy some protection? Here's the weekly chart. As you can see here, we had big symmetrical triangle on the weekly. We broke down a weekly. We took out the 340 pin. Now we're going to be the 324 area here. That's the next pivotal low. And then, of course, the round lot 3 number. And if this copper continues to sell off, which if the metals are doing, I would definitely be cautious here with this market. Okay, let's take a look at gold. Now, when you have, this is what I say about a sell-off. It's just too fast, too furious. If you're long and you're long a bunch of stocks, this is why I'm not looking to get involved in. And this is bad. Now, this is gold's 1480. I'm recording this thing early, 4:30, 5 o'clock in the morning. Gold's at 1408, down over $80. So this is not something that you want to be looking to pick a bottom in here. This is a very large candle, and everybody is long gold. And when everybody gets long gold, as is the market, you have to be very careful, because that's when you can get these really bad and scary sell-offs. Okay, so that's gold. Here's gold weekly. We just broke the 200-day moving average as of this morning. We are down at the 1410, 1408 area. We're below it as we speak, so we're going to have another large engulfing candle, and a lot of precious metals tend to trade this way. So when you have consolidation, and we break lower, everybody is running for the doors. So when gold opened yesterday, Sunday early, gold immediately started to tick lower. So that tells me there's a lot of fear, and that actually could put a damper on this rally as well. When you have precious metals and money coming back out of gold, and if the market gets taken out as well, then you're going to have these risk correlated assets really take a hit, and money moving into these safe haven sectors like it has been, healthcare, industrials, and consumer discretionary. That's why I was a little dumbfounded on Friday when you have retail continually tick higher when we had terrible retail sales. It's just nothing adds up when things aren't really in sync with each other. That's a sign for me to say, hey, back off. Something's not right here. Let's wait till price starts to move lower. And there's plenty of time to make money in this market when the market starts to when volatility even picks up. Even if the market sells off, at least the market has realigned itself, and now you could start looking to buy dips and really get aggressively long even. Anyway, so that is the gold. And let's take a look at the Huey, the gold bug index. Broke the 61.8% retracement, which was holding nicely for the last 3 weeks. We did get a small little bounce here. Now we're headed to the 71.6, 78% retracement. Not plotted here, but we're right in this area. So today we should move much lower into that 275 area. So again, we'll just see how this gold reacts. Could be a damper on equities as well. All right, so let's get into the charts. Take a look at the charts here. Here's the GDX. Again, this big engulfing candle, major distribution, as well as it was back in here. Now we broke this long-term downtrend line, and we're heading lower. So we're down about, I'd say, easy dollar right now this morning on gold, on the GDX, excuse me. So I would not be looking to pick a bottom here, guys. Not yet, until gold stabilizes and chops around a little bit, form some sort of a bottom before you even look to trade it, because you could easily get stopped out of this trade. Okay, here's USO, and obviously USO will follow suit as well. Whatever usually the precious metals are doing, commodity sector. So when you have weaker commodities, gold and oil exactly will sell off with it. Here is the S&P monthly. Now we took out our high here, so this is obviously a great excuse to take profits. We broke out here in this area, and now we're looking to roll back down again. Large candle. We do have our large uptrend channel. And now we could literally get to 163, no question about it. But look at the volume. Volume here is really disturbing. You have a whole month. Now we're only into half of the month, so we still have a lot more to go. We got another 2 full weeks of trading, but the volume so far really hasn't been that great. And you go into the daily chart, you'll see there are days we do have some decent volume. Stochastics again reading overboard at 96 on a monthly. That's extreme on a monthly chart, no less. Here's the weekly chart. As you can see here, made all-time high. Spiders 160.01, again overbought, and our weekly chart is a little bit less than the previous week. And as you can see here, we had a distribution week. And every time when we have a distribution, it's always greater volume than when we have accumulation days, as you can see here. So let's see what happens, guys. It's going to be very interesting to see if this market can really hold in here, or we get a decent sell-off, which I'm really hoping for, actually, just because even if you have a sell-off, volatility picks up, markets start to move again and not just grind, and there's good ways of making money here to the buy side and to the sell side. All right, and here's the daily chart, guys. We had on Friday we put in the doji. As you can see, we did sell off to 157.72, and we actually closed at 158.76. So markets recovered from the early morning sell-off. Then really what it did was just sideways grinded higher into the late afternoon. And as you can see here, this is exactly what happened. Pop lower, S2, grinded sideways all day, and then a quick rally into the close where the markets closed pretty much flat. Okay, and here's a 30-minute chart of the S&P cash. You can see here, same thing. Caught S2, which was the 50 period, excuse me, and you can see our indicators are all rolling over. So to me, we're making a lower high off of this high. So we need to continue to stay here. So if we start breaking down again and take out Friday's low, that's really what you want to be looking at. The big low where we want to look at is 156.65, which is this guy right up in here. 156.65 is really what we want to be looking at to really accelerate to the downside. But let's take a look at Friday's low. Let's take it one day at a time. Friday's low is we need to take that out to have a short-term downtrend for the day. at least for the day. Let's talk about the day here. And then once we break down, then we could look to sell rallies here for the day. That's going to be my cue. We did say Wednesday, Thursday, and Friday that markets are looking for I'm looking for a higher high, and we did get that. Today, if we break, this will be the theme here. If we break this low from Friday morning, then I'm going to be looking to sell rallies during the course of the trading day. And here's the IWMs, really worse than expected here. IWMs really was the weaker of the bunch, and as you can see here, but did manage to pull in a doji candle. So we'll see. Take it again. Take it one step at a time, and just follow your trade plan. That's really important. Follow your trading plan and your risk plan. Transports did a little bit better than the Russell, but Russell had an outside day reversal, as you can see when I mentioned. We did close just at the previous close here on Thursday, but we are under the 20-day moving average, and we are at the long-term uptrend line, back testing it. Okay, we are above the 50-day on the transports, but watch the transports as well for some sort of market divergence, some intraday market divergence. XLF banks reported, and quite funny when you had Wells Fargo report, JP Morgan reported, they were all down and they all rallied off their lows. Again, buyers of dips stepping in. Okay, so you have to be cautious, because as of right now, selling relative strength to what the market's doing hasn't been working as much as it was last week or so, because of this euphoria of buying everything. Doesn't matter what's going on, and that's what kind of scares me even more. When you have relative weakness and markets, stocks should be going lower, and they just go lower for a small degree, and they trade either sideways or they grind higher, recouping some of that loss, and that's disturbing when you have markets and stocks shouldn't be where they should be. However, we only trade what the markets give us, and if the markets are trending higher, you should be trading buying pullbacks, stocks that are strong, buying pullbacks for the day, and or selling relative strength. But again, the last couple of days that hasn't been working as well as we'd like it to see. Okay, take a look at the diamonds. As you can see here, the Dow Jones has been totally on fire since the 2nd of January. Literally up, sideways, up, sideways. Now we're in another uptrend line. Again, everybody is buying the Dow, and that's, again, a little scary for me when everybody's one-sided, just like gold was, and now gold is ticking back down to the 408 number. Okay, now Apple. We have Apple here sitting on the 420. Weekly chart, inside week from the previous week, holding in steady, but this is not looking too good. If Apple can't break above 440 and 450, I think the next bet's going to be, if I was to pick a direction, I think lower. And Apple, you could see here on the daily chart, really hasn't done much other than a slight bounce off the 420 into the 440, and then failed, and now rolling back down again. So again, I treat Apple as just a regular day trading stock for now. If you are looking to trade it, I would not be looking to build positions in it. I think you're going to probably see 400 and probably lower at one point in time, because Apple can't get out of its own way, as you can see here. Okay, double bottom, yes, but if it breaks 420, I'd say look out for the 400 for the next target. And then we have our semiconductor sector, the SMHs, actually recovered quite well. Still holding in here, though. We did get a big move lower, as you can see, but we did manage to recoup at least half of the losses. So a little bit of a positive note on Friday. And then, of course, the Qs. Lastly, Qs had a big week, broke out of this consolidation area, still within this big bearish rising wedge. And it's only bearish when we break below the lower trend line here. So a lot of work to do. Look at the Bollinger Bands, how they're pinching here. So it looks like to me there's going to be a big move coming. We'll just have to see what direction. Doesn't really tell you where. And then lastly, here's the daily of the Qs. Okay, guys, longer video than usual, but I wanted to cover a couple of things. Watch those commodity currencies. They're getting whacked. If you guys are trading commodities, New Zealand dollar is really my currency of choice. They are such a small country, and with lower than expected, weaker than expected China data, look to see the New Zealand dollar and the Aussie dollar really to start breaking down here. And as well, keep an eye on our currencies and our equities, because I'll tell you, if everything starts to line up, I could see a pretty nasty sell-off coming in the near future, in the coming weeks here. Now, again, that does not have to happen, but just be aware of your surroundings, that there's a bunch of red flags out there, okay? Have a great day, everybody. Be safe, and we'll talk to you tomorrow. Take care.